Okay, well, hey guys, welcome to our workshop, how to morally, ethically, and legally reduce your tax liability. We're going to look at all things taxes, answer your tax questions if you have any. And so that's pretty much our objective here. We're going to get started with we have a PowerPoint presentation we want to share with you also. So the name of this workshop is how to morally, ethically, and legally reduce your tax liability, tax-free living, and then understanding your total tax exposure. So this workshop I started teaching, let's say 2 years ago, but this information has been in my head for at least 15 years, right? And so some of my clients who had the courage to trust in this process or reducing their taxes have won, right? It really didn't become popular until Donald Trump said on national TV that I don't pay any taxes because I'm smart, right? So then people go like, wow, he's smart. He doesn't pay any taxes, and he's not going to jail for tax evasion either, right? So he might not be a moral man. He might not be an ethical man, but trust me, he got the legality tight, right? He's working the tax code, right? So this particular workshop is brought to you by Joshua University, right? So it's my own university I have created for my clients to educate them and all things financial. Okay. All right. So I'm going to get started. Right. So taxes. Let's see here. Move that out the way. So taxes. Income, both federal and state. Sales taxes, excise taxes, property taxes, business taxes. So understanding your total tax exposure, right? So taxes, federal and state, nominal tax bracket of 33%. So if you make $100,000 in a state like Illinois or California or New York, where it has both state and federal taxes, Uncle Sam is looking at a minimum for those taxes, 33%, right? And then you add sales taxes, depending on where you are. In Illinois, 10%. Excise taxes, those are taxes that are baked in products and services. Property taxes, those of you who have properties, both residential and commercial, you have some familiarity and some experience with paying those taxes. And then business taxes. So if you are in business, there's taxes that are due for your business, right? Payroll taxes, things of that nature. So, excuse me, get your calculator out. Income taxes, and of course, I'm looking at the state of Illinois, right? 28.95%. FICA is about 7.65. Sales taxes, 10%. Excise taxes, a minimum of 1.1%. Property taxes, a minimum of 4%. Business taxes could be as much as 15.3%, right? So who has the calculator and added those taxes up? Anyone add them up, or you just, this is a workshop. This ain't a, sit back in your chair, Mr. Lee. Workshop. Y'all need.
Well, I don't have a calculator because I'm on my phone right now. So
okay, let me put it back.
Same thing. I'm already on my phone.
Okay, everybody ain't on their phone. Yeah, you help people out.
From the gist of it, it seems like it's 50%.
It's more than that. 28.95%.
All right, that's right.
Federal and state. FICA 7.65. Sales tax 10%. Excise taxes, a minimum of 1.1%. Property taxes, 4%.
20,
Business
30.
taxes, 15.3%. What's the total tax exposure?
Look like the total tax exposure is 56.4%.
Okay, all right. So 50 to 70% of our income is exposed to taxes, depending on what state you look at. That's a lot of money. So when you work your job, your income taxes come out. Then you got your sales taxes, got your excise taxes, which is for fuel, utilities, manufactured goods, and you wrap all that together. It's like, wow, me and my spouse, we got $150,000 coming in, but it seems like we poor. You see why you're poor? Taxes. Right, those are just taxes. And then don't add in insurance, life insurance, health insurance, homeowners insurance, car insurance. How are you going to live in America? Right? Yeah. So taxes is a real deal. Taxes is robbing you of your wealth. Taxes is robbing you of your freedom, right? Let me turn my light on here. You guys can see me. So taxes. So can you guys see me?
Yes, sir.
Yes, we can
Okay.
see you.
Okay, good. So
That's Yes. fine.
yeah, right on. So you see how young I look, right?
Yeah.
Yes, sir.
That's because I'm not burdened down with taxes. It's not robbing me of my time, of my energy, of my wealth, right? Because I have a tax strategy that's moral, legal, and ethical, right? Yeah, so I'm aging backwards. The more I can, reduce them taxes, right? The more I can get more of my time, more of my money, and enjoy myself. That's what you call living youthfully, right? So taxes, taxes is a big deal. It's the biggest expense that we have. You can combine transportation and housing and food, right? Does transportation, housing, and food, does that equal 60% of your budget? No, this is a serious problem. If you didn't know, right? It's a serious problem, and it deserves serious attention. So I'm not going to waste your time here. If you want a tax strategy, you need a business, right? The number one strategy is a business. So you need a business. So that's why we started with the business a couple of weeks ago, right? Because that's our tax strategy, right? So everybody have a business?
Yep.
Yeah, consultant. Yeah.
Okay, everybody got a business. So, I used to do a workshop called "If You Don't Have a Home-Based Business, You Got a Hole in Your Head," and I came to plug the hole, right? So, you got a business. Good. Okay, all right. Because now it's like, how do I use it, right? How do I work with it, maximize it to work for me? So we talked about how to set up a tax-wise business, right? You got C corporations, LLC, you got limited partnership, S corporation, sole proprietorship. Sole proprietorship, you might be doing business, but you're not a business unless you establish some type of structure, either corporation or a company, LLC. And that corporation could be a C corp, S corp, things of that nature, right? So let's look at that. So setting up a tax-wise business, right? So number one, the C corporation. The C corporation is the number one wealth building tool in the world, right? It's the number one wealth building tool in the world. So all the slave ships was in C corporations, right? All the major corporations that are traded on the stock exchange are C corporations, right? So that's a very complex structures. And then starting out, you might not need that structure, right? So before the LLC came along, people were like, well, I don't need that complex structure of a C corporation. So they would choose an S corporation, which would make it a pass-through corporation, right? With C corporation, you would have the potential for double taxation, corporate tax, individual tax. You make that C corporation, you elect it as a subchapter S, so all of the profit and expenses flows down to the individual, right? And so no double taxation. So C corporation is set up at your local state level, right? You Illinois, Florida, Texas, it don't matter. That's a C corporation. It's set up, you know, at the state. But the way that it's treated by the Internal Revenue Service is the tax consequences. This one want to be tax wise, right? So understanding you dealing with two aspects, dealing with how the state look at your corporation or your company, and then you're looking at how the Internal Revenue Service looks at it, right? So you got a C corporation and you keep it a C corporation. The Internal Revenue Service want two tax returns. They want the business tax return and the personal tax return, right? So now people go like, well, you know, I'm just a small startup. So then they will elect to have it an S corporation, right? So there's only one tax return done. That's on you, right? So it'll be a schedule on your personal 1040, right? So the IRS will say, okay, all the expenses, all the earnings belongs to the owner, right? So this is what, does that make sense? Any questions on that? On the C?
Yeah, I do have a question about
Yeah.
the sole proprietorship.
I haven't got
What?
there yet. I haven't got to the sole proprietorship yet.
Okay.
Yeah, but I would tell you, you don't want that. You know, it's not
Okay. No, I know. Yes.
it's not an entity. It's not a business. So now, hey, that's the difference in a corporation. You got a C or S, right? Now you have the LLC, limited liability company. The beautiful thing about the limited liability company is that when you set it up with the state, the IRS looks at it as a pass-through entity. All the expenses, all the deduction comes down to you, the owner, right? So you can use these expenses. You can use these deductions to offset income from your W-2 job, right? From your spouse's W-2 job, right? So if you file jointly, I got a job, my wife has a job, I set up an LLC, I spend $40,000 a year to set that thing up. Now I'm able to use all of that $40,000 and write down the tax liability that me and my spouse would pay, because we're making $200,000 a year. Uncle Sam want about 80 grand, right? So we'd be able to save on our taxes by using our LLC, our startup costs and our business expenses and things of that nature, right? So that's the beauty of an LLC. Plus, an LLC, any year 1, year 3, year 5, year 10, you can change the tax reality with the Internal Revenue Service. If you want it to be a C corporation, where you start offering all forms of stocks to investors and stuff like that, you can have it like that. Or you want it to be an S corporation, right? Because you say, well, hey, I'm making $200,000 a year in my business. I want to control my earnings, the taxes that I pay on my earnings, right? So I want to take some as dividends, I want to take some as salaries, and I can reduce the amount of taxes that I'm paying, right? Make sense?
Yep.
The
Yes.
sole proprietorship. Sorry, Ernest, I'm trying to cut you off. What was the question you had with the sole proprietorship?
What's any benefit? Why most people will start off with the sole proprietorship? I know, like I've started this way, but I know I wasn't completely compliant. So.
Well, no. So the sole proprietorship is that, you know, like I'm saying, you're doing business, but you're not a business, right? Because say, for instance, you know, there's a lot of thought out there that you only need to set up, organize your business when you start making a certain amount of money, 100,000, 200,000, 300,000, because and this is true too, because when you start making more money in your business as a sole proprietorship, you start making $100,000, $200,000, you open yourself up for audits, right?
Yes.
Yeah. So now when you structure your business, you reduce your audit probability, right?
Yes.
Okay. All right. So now you cannot build credit in a sole proprietorship and because you don't have an EIN number. That's the drawbacks to a sole proprietorship. Also, your financial and legal liabilities are on you and whatever business that you're doing. So you're still maintaining all that exposure, right? Okay. All right. So that's not a structure you want. Okay. So we got to set up a tax-wise business. So when we talk about it, you tell me this is the business that, you know, I plan on setting up. All right. Do you have investors? No, I'm taking the money out from under my mattress to fund it. Well, you know, then we'll determine what startup we're going to do. We're going to do a C corporation, S corporation, LLC, right? Based upon how you're starting and your vision for your business. So it's more than just going to LegalZoom and setting up some paperwork, right? Okay, all right, good. So let's go back to the presentation. Because so that's where we start. We got to start setting up a business. And might as well let you know now, Stone Consultant, LLC, I am bullish on the LLC. As I stated before, you know, at any time in the future, if I decide to take on partners or investors, I can change my LLC to a C corporation, right? Also, one thing about when we talk about asset protection, I'm just going to drop that here. It's not really the scope of this workshop, but when we talk about assets protection, the company has a corporate veil. The corporation does, the LLC does, but the LLC has something a little bit extra. It's called charging orders, right? So the corporate veil protects me from activities in the company. So this is a business, Stone Consultant, this is a business activity, right? Me doing a workshop and I give you some information and you go and take it and lose $1 million, you might want to try to sue me, right? So that's what the corporate veil protects. Now, you know, I have a personal life. So if I go do something personally, go hit someone, vehicular homicide, accidental death, that's a $2 million claim. They're going to come at me personally, and then they're going to try to make a run on my business. Then the charging orders protects the assets of the company. So that's one of the most powerful thing about your LLC. And of course, in the state of Illinois, we have very robust charging orders. So does the state of Texas. All states don't have it because they can definitely kind of get at your company if you do something in your personal life. Right? Just wanted to drop that on you as we were passing by. Okay, so now we got our business. We're going to get out of the box, right? So this is these benefits are for the LLC, or you can use these with a sole proprietorship. You can't, a lot of these you cannot use with a C corporation and S corporation. It's called self-employment benefits. This is another reason that we're bullish on the LLC, because you stay self-employed, right? health reimbursement arrangement, HRA Section 105 plan, right? So dental costs, co-payment, prescription, chiropractic care, acupuncture services, just to name a few. So say, for instance, you're married and one of the spouses are working a W-2 job and they paying for that portion of that $400 or $500 a month that they're paying for your health insurance, you can write off. And then if you put your spouse as an employee of your business, you'll be able to get all of that, right? And then you got children, you got plenty of copay, so you make your children employees of the company. Dental costs, right? So dental is very expensive, so you can only write off so much of that based upon your medical period, based upon your adjustable gross income, your AGI. So now with this plan, you can start writing all this stuff. This is a game changer for someone who's young, raising a family, husband and wife, a couple of kids. This right here potentially can save you, $10,000 a year, right? Chiropractic care, acupuncture care, massages, health, herbal tea, right? Anything health related, not only just the medical stuff, but the alternative health, right? Of course, we're talking about, hiring spouses and relatives, that will be your children, so they can take advantage of the health reimbursement arrangement. Also, so that you can pay them and reduce your income. So when you start making $100,000, $200,000, $300,000 of income in your business, you can hire your children, right? You can hire your aging parents to do work in your business, and they have a lower tax bracket. So now you're shifting that money from your high tax bracket to their lower tax bracket. Vehicles, multiple vehicles. Number 3 is the most deductible item in a business is vehicles, right? So you need to have a vehicle log. You need to have tracking. Not only is the most deductible item in a business, it's the most audited item in a business. So when you're running your vehicle for your business, hey, okay, I got software. Every time I jump in my car, start it up, it tracks me, it tracks my expenses that I pay. So you need, that makes it a lot easier these days. Then multiple vehicles. So, when I'm doing my regular routine work, I'm driving around in my Chevy, but when I'm entertaining, my top tier clients, I break out the Cadillac, right? So now I'm multiple cars, right? So it's what travel. So let's talk about this, right? So travel is big. It's big. Some of you guys are friends of mine on social media. Should you place it? So someone has a question about a nonprofit. No, now this you can build credit in a nonprofit, but you cannot. Nonprofit is under a corporation, right? So it's a nonprofit corporation, right? Travel. If any of you guys follow me on social media, if you notice, I've been traveling a little bit or putting it up on social media, right? That's because I'm a content creator. I'm creating content on YouTube and on my social media platforms, right? I have my YouTube channel is called JP TV Travel Show. No, JP some whatever. It's a travel show, right? So I went to Belize for 10 days. I went to Dominican Republic for 10 days, right? So those 10 days, say for instance in Belize, it cost me $3,000, whatever. If I spent that, I'm able to write off 50% of that for business, right? My plane, rental cars, food, accommodation, that's internationally, same way in Belize. But when I travel domestically, I can write out 100%, right? Better get ready to run down to Florida for 3 days to create some content with one of my cousins, right? So 3 or 4 days, run down there, flight, hotel, rental car, whatever I do, food, whatever, 100% write off. So travel is 100% write off. And so if I was blessed, like Mr. Lee, to have a wife, I'll put her in my company and she can travel with me too, my employee, right? Yeah. So, yeah, so travel is a big, big deal, but there's rules and regulations about it and how to do it, right? Right, so how many days you can be gone, what days that you can be gone, over the weekend stay. So it's a very complex reality, but it is very possible if you do it right, right? So travel is a big deal. Okay, MG. Who is MG?
It's Mark.
Okay, why are you asking all these questions in the chat?
I can't talk much right now.
Okay, all right. Okay, you're interrupting me, man. No. Okay, Mark, I'm gonna get back to that. All right. Travel's a big deal. It's a big deal. This travel's a big deal, and that health reinvestment plan is a game changer, right? It's a game changer, especially I wish I would have been aware of that when I was raising them little kids myself. And if you're a man, the wife always gonna take them to the hospital. You're like, no, they need to ride this out. So it's always hitting that copay, right. So, and then business retirement, right? So retirement, that's a self-employed pension or Roth 401k. So you're going to be responsible for your own retirement, right? So now business retirement accounts, you can put 25% of your income. Depending on your age, you got $5,000 of catching up. So so with some business retirement accounts, you can dump $45,000 to $50,000 a year into those accounts, right? That's huge, right? When you're trying to save for retirement, you're trying to build a legacy, you're trying to build some wealth for yourself. Those things are very important. So number one, health reimbursement arrangements. It's a game changer, right? Hiring your spouse and your relative, right? Vehicles and multiple vehicles, travel, right? Everybody wants to travel. So why not get your government to subsidize your travel, right? Okay. So let's go back here. So these are some fundamental pieces, right? That we're looking at, that you need to have a business, and you if you want to run this strategy moral, legally, and ethically, you need to set your business up correctly, and then you need to have a business endeavor that allows you to travel, right? Ernest, what type of consulting business are you in?
Software consultant, website, software, mobile.
Yeah. So you can consult all over the world.
Yeah, exactly.
Yeah, not only locally, but internationally.
Yeah.
You sound like, I think you told me you were from Parlez-vous Français, right?
Yeah, I speak French. I'm from Montreal.
Yeah, see, back and forth. I got some clients of American French and live in Paris and this type of stuff. So yeah, so now you can move around and all that back and forth becomes tax deductible when you run over there to see clients, to consult them in their businesses, right? So
yeah,
this is very important. you set up, because the way you start is the way you finish, right? So you got to set up a business. You want to start living, want to show you how to live as a company, right? So this is just to let you know that these things are possible for you and your family. 50 to 70% of your income is exposed to taxes, right? So could you imagine over 20, 30 year working life, if you could divert some of that money back into your retirement accounts, back into your business to build your business? So it's all about doing things that your government wants you to do, right? They want you to build a business, right? They subsidize business owners. They subsidize, people that do these type of things, right? So with that, listen, we want you to subscribe, like, share our content. If you need one-on-one consultation, go to joshuapondexter.com and go to our website, schedule the first consultation. Is free. Avail yourself of that. I want to thank you for tuning in. All right, bye for now.